Hey everyone, welcome back. My name is Levi Woods. This is Tuesday, September. No, it's not September. It's November. It's November 4th. Getting into it. Pretty excited today. Market is red. My account is down. My sign is red. You can see that right here. We always do that. If my account is down, then I put it on red. If it's green, then it's green. I have a button for blue as well, but I never use that. Yeah, it's kind of a weird color. But today my account is down slightly, and I hope that your account is not down too much, because that is the name of the game. That's what I'm trying to do. Try to look at the long-term plan and say, can we make money consistently over the long term? And hopefully you guys are doing awesome. Everything we talk about here, not financial advice in any way, shape, or form. It's just what I'm looking at, what I'm doing, what I might be considering. Markets are down a little bit today. Let's get into what is going on in the markets and take a look at, just making sure that my screen is loaded up here, ready to go. Take a look at what is happening and whether or not we should be concerned. SPX. Trading down a full percent today, and it's tight little trading range right now. So we have tall wicks on the daily, and we have tiny little wicks, tiny little trading range right now. What are we doing? Are we buying this? I would love to know in the comments. Are you buying up this drawdown? Are we going to bounce? Are we going to head lower? We are still inside of the Bollinger Bands, so this is not necessarily a crazy time. We could see some further down from here. Now, NASDAQ down, the big strong red candle to the downside, small little wick. So this indicates that we could go a little bit lower. Let me know what you think on both of those. Russell, we're definitely seeing a potential level of support. We've wicked down to this just a couple days ago on the 22nd of October. We had a wick a little bit further last Tuesday, the 14th, and then on the 10th we saw quite a strong drawdown to the Russell being down at 23.95. So not hugely off those levels at this point in time. We don't know what will happen, but again, inside of the typical trading range. This is not unusual action at all to see these. Dow Jones Industrial, same sort of thing. We saw the market tip outside of this VWAP, and we're coming potentially down. VIX is up. This is a great time to be selling premium. If you're a put seller, when the volatility index breaches above 18, this is when I like to sell. VIX is currently at 18.99. This means I'm opening volatility plays. Yesterday, we were above this as well. I opened a ton of short puts yesterday, a whole bunch. How many did I do? I think I did 34 new cash secured puts yesterday. So taking advantage after having some consolidation after this little low. US oil trading inside of the range as we expected. This is a nice little move. My positions are playing very nicely. We're in like the right near the max profit range. Gold, same thing with this. I've got a little max profit range. I don't know if you guys remember, I put on a trade to fall below the 4,005 level for November. So right here in that 3,800 to 4,000 level until the bit of November. That was what I was looking for. I don't have any upside risk. If gold goes back up, I don't lose. If it stays in this range, this is my max profit. The idea with this, and we've talked about this week over week, is that when we see these extreme moves, when we see the market moving up the way that it has, I can't see I can't see all the chat. Can somebody confirm that that I'm working, that everything's great? Because I don't see anything. I started a Q&A today. Maybe that was the wrong thing to do, because now I can't see anything. I'm going to end this Q&A. Did you guys answer? No. Somebody let me know that we're working, because it's always better when I'm not talking to myself. I'm pretty sure that I am, but it's yeah, it looks like it's working. Justin's just got a question mark. I don't know what that means. You're here. Good, Justin. I'm glad you're here. Can you hear me? That's the big thing. The audio is always the thing that it's like it appears to be working, but sometimes people can't hear me. So if somebody confirmed, thank you so much. I appreciate that very much. Okay. Getting back into the analysis here of gold. When we were at these, when we saw this action, we saw this price action outside of the Bollinger Bands or off of the standard deviation, one standard deviation off the VWAP, you know, I start to get concerned. I also think about levels. I know that we're going to have some strength at certain levels just because they're nice round numbers. And we can see those round numbers over here. If we look like 3,700, 3,800, 3,900, 4,000, you know, those are going to be areas where we're going to see movement. So the question becomes where does it fall into? Is there a level? Now, I just take my best guesses. This is not like rocket science. I'm not saying, oh yeah, I know for a fact that when we were at 4,400, I'm putting on a trade that's going to make the most amount of money when we're down, and it's going to be specifically between 4,000 and 3,800. It's a guess. And, you know, sometimes we guess right and it's fantastic. But what I want to do is just make sure that I'm not losing too much. So I'm risking an appropriate amount of allocation, and I'm putting in a position that I can make money if the market goes down. So my break even on the trade that I put in was around like 38 something, right around here, just under 3,800. And I do those with limited loss so that I have a fixed amount of risk, and I set those up as a honey trap. You know, that's the type of thing that I do with those. Silver, same sort of thing. I didn't play one on this. I don't have a current silver position. I've had one since the beginning of the year, and I've been kind of chasing it for not a lot of profit. When we were moving up, this craziness that occurred until we came back into range, this is where I'm happy. I love that we're back inside the range. This makes me want to trade this a little more. Let's look at some of the individual stocks. And if you guys have any questions about specific stocks, please let me know. We'll talk about them. I can bring them up. We can do a fair market value assessment. We can look at the chart. We can do some technical analysis, all those fun things. Apple is currently trading outside of this range. We see this all the time. Point of control is around 265. Stock price is 270. So 2 days ago on Friday, when there was just like peaking up here, what becomes your assumption? My assumption is that it will likely have a small pullback and get inside of this range. That can happen in one of two ways. The range can either expand up and collect it, or the price can come back down. Either one. And I do this on the top and the bottom. If we look at Trade Desk, we'll see that we have similar sort of action. What's happening here is that this band is compressing down. Getting tighter. We have earnings coming up. So let's see what happens. Point of control is this volume here. As we zoom in, we can get a kind of a more macro shot of it. Zoom in or micro and zoom out macro. This is interesting because even when this stock rose, if we look right here, like all of this trading didn't actually boost the volume all that much. Our volume is down here. This is where the bulk of the volume was trading, either here or here. And now what we can do is I can zoom in on this and I can isolate and I can say, well, where is the bulk of this volume? Well, we see again, the bulk of the volume that's been traded is in this range. This usually indicates that we're going to stay in a consolidation mode for a little while when we see lots of volume trading there. We're in a consolidation. We're looking for a breakout. AMD 253. Earnings tonight. We'll see how it goes. Lots of speculation that we could see this stock go up. You know, play with limited loss. If you're going to play with naked calls, you know, play as if you could lose a ton of money on stocks like that. ARK-K, 84.50, inside of the range, nice consolidation, point of controls around $75. So this would indicate to me that we could see a continued retracement if people are selling. And it only has to do with that. Are people selling, the stocks go down? Are people buying, the stocks go up? That's kind of how it works. Let's look at Adobe. We saw earnings. We've got next earnings not coming up till December. We're definitely in a consolidation phase. I did a very nice Adobe trade recently, and we'll see what happens with what's going on. But we're in a sideways range right now. Amazon had earnings, broke way up to the upside. And then we can see when this happens, this is like it's so interesting when we look at these ranges, because we saw this purchasing, we saw the candle gap up. And then today, you know, we opened inside of the candle, the previous candle, or inside the previous wick anyways. And then we're seeing this, what's that called? Morning star. I think that's called a morning star. That's like a reverse hammer. But when we see this, all this trading happening down here indicates a bearish move. We have a gap here between 244, 240. Is this going to be filled? Atticus wants to say hi. Oh no, he doesn't. He's here. First time. I mean, we got a new cat. He's trying to say hi here. I'll show you guys the new cat. I haven't had a cat in a decade, and he wants to say hi to everybody. He's so cute. Look at how cute he is. Anyways, we're gonna put him in some. This is his first time on screen. Can you see? Can you look at the camera? First time on camera. He's a Flame Point Siamese. He's about a year old. Rescued him from the SPCA, and yeah, now he's been tearing my house apart like a crazy man. Anyways, I digress. So let's get back into this. He will probably start joining me on a regular in the live stream just to say hi, because you know he's got that kind of personality. Siamese do. They kind of like to follow you around. Baidu, let's take a look at this. We saw this action earlier this year, just hugely outside of the range, and then we came in, and as soon as we came in, what happened? We started to see inside of that range. Mike, good to see you. Thank you so much for joining. Appreciate it. You're awesome. Appreciate all your posts and your emails and everything. What else are we looking at? What are you looking at, Mike? Everybody's being quiet today, so let me know what you want me to look at. We're just going through some stocks. I've had no questions yet. We haven't looked at anything fun. We've just been going through kind of what is going on. Car Gurus. I don't even know why we have this on the list, but here it is. Trading inside of the range. Point of control slightly lower. These are all good stocks to play. Whoa, Chewy is way down. What's going on with Chewy? Well, this is fun. We should look for a trade on Chewy. Down 3% today. We've got earnings coming up, but still a little bit away. We've got earnings coming out on December 4th. Let's pull up a trade idea here. When I see this kind of action, when I see like a stock like this that's down and I want to get long, what I want is long deltas, and I want to positive theta. So let's take a look, and we'll try to set something to break even, basically effectively buying the stock at this level and giving us some long deltas, because I think we're due for a bounce just based on technicals here. If we're just looking at what's happening, we're breaking down, but we're getting very close to this bottom, which I love. So let's look at Chewy right now. I've got Moomoo open, and so we'll pull up Chewy. And we will take a look. I gotta give you guys my Moomoo link in the chat, because you know they love when I promote them, and they want me to. I'm loving it. I'm loving their service. So they love me when I promote people, and when I promote them and you click on the link. That's basically what they want. Click on the link. So do me a favor, if you like my content, click on the link. That I appreciate it. Better yet, sign up for an account. I really am using it. It's great. I'm loving it. I'm gonna click this. Let's look at the profile valuation. They've got this great valuation price. So similar to my assumption here, we've got a strong buy right now. 83% of analysts looking at it as a buy, 16% as a hold, none selling. Here is here are some of the detailed ratings from institutions. Here's their price: 48, 46 to 46, 40, blah, 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 blah. We can see those here. The high is 54, average is 46, low is 41. Strong buy. Okay, how do we make money off this? Let's look at options. Now, one of the things that I love to do, and this is kind of one of those trades that you can really get quite a bit of money. If I look at the weekly, say I was to sell quite aggressive calls against this, like really aggressive. So I'm looking at a delta here of 33. That's not even as aggressive as we can get, but let's just say we're doing the 33 deltas, which what I want to do is do this as some sort of ratio spread. So what I might do is I'm going to go out to a later date. So I'm going to sell the really short duration. And then I'm going to go out to a slightly later date. Not crazy. I don't have to go crazy with this. And I'm going to buy an out of the money call. Now, when I do this, I'm going to pay a debit for it. So if we look at the curve, what happens with this? Well, we can see I have very, very little risk on this trade. The stock has to trade below 29, and my max loss to the downside is whatever I pay for this, like 30 bucks. So if I paid $30 to enter this, I have $30 risk to the downside. I actually have considerably more risk to the upside. And this is a short delta trade as it's set up. So what that means is that if the stock goes up, which is what I think it's going to do, I want to get long deltas in a position like this. If the stock goes up, I am going to lose money because it's short delta, and those deltas are dynamic. If it goes down, I lose very little money, really, really flat, this dotted line. But if the stock starts to go up, say it goes to $40, it gets steeper and steeper and steeper, and then it starts to flatten out again if I was to zoom out a little bit further. Now, is this trade really great? Is it interesting? Max profit's only 55 bucks. Probability of profit is 57%, but it has to stay in this range between 29.68 and 33.74. What I would actually prefer is to have a break even that is closer to where the stock is trading, replicating more of like purchasing stock. And then I want to make some short duration theta decay off of selling some short duration premium. So if I was to do this, typically what people would do if they went to the tables, they would do a poor man's covered call. So they'd go to January, they would scroll down here, and they would look at the delta, and they would find on the delta, they would find like a 90 delta position right here. This is the 2250 call. So I'm just going to change this to 2250. This is what we would call a poor man's covered call. So it's similar to buying stock right now. So we got a 55% probability of profit, max profit $133, max loss $960. The curve is fine, you know, like that is kind of what I want to build. But I only can make 133 bucks off of this. So that is how a poor man's covered call goes. And if the stock loses, I can lose a bunch of money. Is there a slightly more interesting trade than this? Well, I like to think so. I like to look at these trades where we have like that 33 to 40. Now my downside risk is only 30 bucks. What if I was to buy more of these 40 calls? What happens to that? Well, you can see as a 1 to 2, I have increased my downside risk. I now have $116 downside risk, which is not very much. You know, like if the market was to crash, which we're all worried about, then I can't lose too much money. If it goes up, I actually fall into like a valley of death here, and I don't love that. So can we get it into a place where if we just increase this ratio, where we could actually have more upside potential from this position? This is still only a $300 trade. I have $300 of downside risk. That's considerable comparatively to the $900 that we were looking for that poor man's covered call. This one has a max loss of $393. It has positive delta of 0.58. Let's go back. Let's look at what the delta was on that poor man's covered call. This was the 2250, right? So if we're comparing, this has got a 55 delta and a theta of $3.30 a day. And this range, I basically make $100 something if it goes up at all. But I think there's a way to get these so that we can, what was that price? Here's the $3. This has got a basically flat theta. The delta is 2 nines. We just double the size of this. And now we have a delta of, sorry, we're trying to go 2 to 6. So we have a delta of 0.58. We have a theta decay that's negative in this particular case. One thing we can do is we can just tighten these up. Just tighten the spread. What if I did the 33.35 and then I don't have to do as many? So now I've got about $859 of max loss to the downside. My break even is very, very tight, But look at this max profit. It's now unlimited. It has an unlimited max profit. We have a 49% probability of profit, which is what is to be expected when we are buying a stock position. Basically, it's 50% gamble. We're going to go up or down. And if it goes up, there's no upside risk. The max risk is what we pay. So if we paid $909, we would be into max profit of 909. And the theta decay is still negative on this. So let's go 3 here. We've got a 95 delta. This is costing $800 because we're selling 3. So we've got less risk. We have a 55% probability. We have positive theta that's almost identical to a poor man's covered call. But now our max profit is unlimited. Now, if we go in here, are we going to make as much at expiration? It actually is showing our expiration is a risk at our, if the stock was to go back up to 33, would be $244. So it's almost double with less risk. And I keep playing these types of things, and they're substantially better than a poor man's covered call. Can we adjust them? Yeah, we can do whatever we want. You know, it's a diagonal of sorts. So this one has a little more risk to the downside, $958 debit. The delta is exactly the same as buying 100 shares of stock right now. Max profit, we can hover over this and we can see like where would this max profit be? Let's around $200. The theta decay is $5 a day. This has more theta decay on it. They're relatively easy trades to do. Was there a 30? I like the 35. I like this trade, you know, making a theta of $3 a day, max loss 800, 54% probability of profit. Yeah, they're smart trades. Anyway, something for you guys to consider when you're looking at playing long positions. Does it make sense to get into these? See, now the cat's going crazy. He's like, here's me talking to you all. And he thinks that we're gonna, I don't know what's going on. He wants to come play. Mike Mueller, you went over the ratio diagonal spreads last week with regards to playing a gap fill. Would you typically take the trade to expiration, or do you have a profit percentage in mind? And Terry, you made it. Fantastic to see you as well, Terry. Thank you for making it always. I'm going over diagonal spreads as well. You know what, when we see this volatility, when we're looking at, let's just look at the screen here. When we're looking at the volatility, this VIX level, and we can see we're having a nice little spike up, but we think that it might drop back down. Unless we get extreme volatility, and this is getting kind of nice. I mean, if we have another sell-off and we can get up to like a 24, I hope everybody has some cash ready to put on some trades, because that would be fantastic to just get into some new trades if we do see a little bit of volatility spike. But what happens if we don't see it? You know, like, why not play the short duration volatility and get into some cheap trades? You know, that's what this is doing. It allows us to put on some really cheap trades. Okay, the cat's going wild. I don't know what to do about it. We're only 24 minutes in. Let's look at another, just like a different type of setup. Why don't you guys throw any stock out at me? It doesn't matter which the stock is. And we're gonna take a look at calendars. We're gonna look at like some sort of diagonal or calendar. Ever trade any futures at Apex Trading? I have not. You know what? I know tons of people that do. Like Apex is one of the prop firms that allows us to do that kind of futures trading. I know a lot of people that have like rotated a bunch of accounts and gone through that. I do have a theory about like how to get funded. I know that's the hardest thing, but if people were like interested in getting funded in any sort of those things where it's like a binary event where you have to make a lot of money, playing earnings, like say you opened 4 accounts, let's just say you did, this is all theoretical, but say you opened 4 Apex Trading accounts, and then you bought calls and puts on an earnings event, and you bought the calls and the puts in both opposite accounts. So you bought 2 accounts with 2 long calls, 2 accounts with 2 long puts. Basically, you're going to have half the accounts are going to fail, unless everything stays in the middle. I mean, there's a chance you could lose on all 4 accounts. But in this, if you get a good move on earnings, you would basically be able to make a decent amount of profit on the move. you would be able to fund your account because 2 of the accounts would fail and 2 of them would be like, oh, we've moved on to a decent amount of profit. And then if you haven't made enough on that, we do another earnings trade and you do the exact same thing where you just bet long and short again against it. And you end up with 1 out of 4 of the accounts winning and you've got a funded account. So I know there's people that are like, that's one of the hardest things. And then keeping that account balance. I get what they're doing. Like they're trying to get you guys to trade and they're trying to keep the money in because if the balance drops, then you lose the account. So it's an interesting way to do it. I do have an acquaintance that's come out to one of our Okanagan stock trader meetings, and he has done quite well, or was doing quite well with Apex trading. I don't know if that's still going on. Lots of people that are futures traders, lots of traders lose money. You know, it's a tough game out there. Meta is a mess. I am definitely losing some money on Meta right now, but betting that we're going to recover. Thanks for bringing it up. Let's look at Meta. And earnings obviously got lambasted. We're trading down a massive amount. We are in this range here. Let's actually look on TradingView just to see the volume. I don't even have Meta on my list. I should add it. So we're gonna pull up. What I want to do is look at the volume on the side here. We obviously had a gap on this, more volume above. I'm going to zoom out here just a little bit. What I'm doing here is I'm looking at this visible range volume profile. I want to see where the bulk of the buying was happening. See, the volume down here is actually pretty low where we see this recent trading. So although this volume is high, it's nothing comparatively to this valuation up here. We're not way down. Like it's, when we look at it from a range perspective, it's actually barely below the VWAP. So this is an interesting time. What is going to happen? Is it going to magnet back up to this point of control? Or are we going to see this continued slide down? This is where diagonals can work extremely well. And we can play with limited risk. So let's go to the options on Meta and let's take a look at what we want to do. So 3 days is getting a little tight, but we can do very short duration trades on this. And especially with how much premium there is on the short duration, like stocks trading at 630. What if I was to do the 620 put to sell that? I would get $1,000 for this. If we look just at that curve, I mean, if you were thinking about buying Meta stock at a decent level, $609, is that not a decent level? It's pretty great. Stock's down another 1.1% today. It's trading at 630. This is over the next 10 days makes a $10, well, $1,000 profit if Meta stays above 620. Now, this may be too big a trade for someone. Max loss is $60,000. So you have to have a relatively large account to be playing something like this. This is like this is $1 million account to have a 6% position. So it depends on where you are in your life. Probability of profit is 68%. Absolutely nothing wrong with a trade like this. But let's go to the table and say what happens if we want to take a little less risk. What if we go out to, let's not go crazy. It's going to be expensive if we go out too far. I just want to buy like a $10. I want a $5.70. What $9? So this is giving me a net credit of $100, $155. And what does this curve look like? Max loss is now $5,000. Max profit is $1,000. Similar sort of range. And this is where I like diagonals quite a bit. We have the decay of the short duration option. We have a slightly positive delta, which means if it goes up, we're not going to lose money. There's no upside risk on this trade whatsoever because it's being opened for a credit. That's super important. But the spread is wide. We have a 50-point wide spread, much smaller than just buying shares for $60,000. So it depends on what you want. Delta is positive at 0.18. Theta is $50 a day. Let me just turn off that 570 put. Actually, what I'm going to do is I'm going to keep it in play, but I'm just going to go down. Like, what if we bought like a 400 put? This is a $20,000 max loss. Well, now the theta is $70 a day. So it's costing $20 a day to hold that. position. This is another way to buy that protection and reduce the max loss. It's just buy a cheap put. This 400 put for December 19th, 45 days out, this 400 put costs $34. So it's not really cutting into the $1,000 very much. We could definitely do higher. You know, you could say, okay, well, what if I use 10% of what I was collecting? What if I bought the 465? That's another way to do it. This allows people to put on bigger positions. Max loss is now 14,000. Max profit is 1,000. 68% chance. No upside risk on this because you're collecting a credit to open. So again, if we look at the curve, making $1,000 with a max loss of 14,000, much smaller trade. These will handle a little bit of IV expansion, but not a ton when they're this wide. If you go really tight, you can get into something that'll handle the IV expansion. Something like a 620, 610. Now we're in a much tighter range. These types of trades will handle a little bit of IV expansion, which is great, but they're open for a debit. And so you have to make that money back. We actually need the stocks to stay down. So if I was going to trade those, you know, I like to get for a smaller credit, or I like to ideally get a credit to open. And so even something like this, $72 gives me that little break even. Max loss is $4,000. Max profit is $972. So this is similar to a put spread. We could just do it as a put spread. You could go out here and we could go to November 14th. And what we would get on this is similar. We would pay, in this case, we would collect $887. So trying to make about $87, but the decay is faster. Expiration P&L is like $3,000. We can lose $3,000 as opposed to if we do it in December. Max loss actually showing it bigger, but if we were to go, say we were going to drop to 580, let's just say we drop to 580, expiration P&L is only 1,600. So considerably flatter position. The stock has to drop a lot further before we hit to that 3,000 level. Has to drop to 550. So it depends on how far you think it may go. But that's some of the stuff that I'm looking for. And again, if we can get this for very small debit, I might be okay with taking something like this. Palantir. Let's look at Palantir. Yeah. Is it a mess though? Palantir is going to be the same sort of thing. Let's look on, just so I want to see some of the volume. Turn this off. Palantir is definitely Palantir 2. So I don't know, Justin. Are you saying that Palantir is also a mess? I don't think so. Palantir is absolutely cruising here at all-time highs. You know, like this kind of thing. When we see this type of pullback, it's so minuscule. It's right in the channel. So we're above VWAP. You know, Palantir, if it went to $63, that would be a mess. That would be a long ways down. But VWAP right now is still $135. These stocks are like almost a joke to look at, you know, and because they just have gone up so much, and then people see like a little tiny blip down, and you're like, oh my goodness, the stock, the sky is falling 8% down today. Like you're like, did anyone look at these charts? Like this is mayhem, and this is a small pullback relative to what it could be. And the reason I'm pulling up some of these other things, Palantir, that valuation right here. If anybody doesn't know, when we have an F rating on valuation, that means we could see a serious sell down. Rating summary, hold. You know, not really great. This is today. We've got somebody saying it's a strong buy, and it could be. Now, Am I adding to my Palantir? I wasn't going to add to my Palantir position today. It just didn't quite make the cut. But let's look at one more. Let's look at investing.com. Fair market value $93. So let's take a look at what. Now it's interesting here because we actually see quite a bit of bullishness. If we just look at the screen grab, and I'll turn myself off for a second, we can see the great performance so far. So it doesn't mean that it can't go up. It just means that here's fair value based on the numbers, based on the metrics, which I love investing.com. And definitely with a company like with Palantir, it's very hard to get in some of these, that type of thing. When you're saying, okay, well, the fair market value is $93, like it's so crazy low comparatively to where it is. And people would be having an absolute panic if we went that low. But it doesn't mean it can't happen. That $93 is still within the range off the VWAP, which means that, and this is the volume weighted average price, right? Like that's what the average price is. So the majority of people are profitable if they bought Palantir. It doesn't mean you're profitable if you bought yesterday though. It just means that over time, and it's because the rise has been so great. I'm leery, but I have been leery. I was actually trying to short Palantir earlier this year, and of course I didn't take very much risk. I took very, very little risk. But these are the types of positions where it might be very smart to bet that it could come down, and how can we make money off that, especially if you've got long stock. Like what I would want to do is try to protect myself a bit. I might do this like on a monthly basis. I might say, okay, well, what if I collect $93 for this this particular hedge, and I'm gonna show you. So this is selling a put. You're like, how is that a hedge? That's not a hedge. Well, I'm just gonna go out to March, and I'm gonna see what I can do. If I collect $93, can I spend it in a way that? So this is the 140, 180. Yeah, these spreads are so big. This is like a small credit to open. It's basically flat to open. It doesn't provide any protection. But what we could do is we could sell some of these and then buy an extra one. And and then this is where, if the IV expands, do these become profitable? This tent is huge. If you look at it, like that's $5,000 that's showing right here up. So max loss 18,000, max profit 5,000, 77% probability of making money if we sold 4 and bought 5. This has positive theta decay. This actually is positively growing. The problem is if Palantir sells off below that level, then it's actually not functioning as a hedge anymore. So in order to be a true hedge, you kind of have to have quite a bit of protection on. But now you're paying, what is the cost to get into this? This is really only $88. What have I done? That seems crazy. Let's set that up again. December 19th, the 140. No, we were doing even lower than that, right? Uh, 140. This is Delta 8 Delta. Yeah. 45 days. Let's go to March. Okay, like was I seeing that right? Was that really that cheap to do that? So I'm getting 178. So buying around the 92. Let's just set up something slightly different. This is for a small credit. So if I bought 5, sorry, I bought how much would this cost? $195 debit. $195 of upside risk. Expiration P&L is $10,000 if the stock was to drop to 140. This makes a positive theta decay. Max loss is $12,000. So I would want it to be a little bit less than that, but $477. Is there any upside risk on this? Not showing. I'm gonna just play with this a little bit more. This is pretty interesting. Well, that one showed that there's no risk. Probability of profit 100%, $663. Of course, there is risk. It's to the upside. If Palantir just keeps going up and up and up, you lose out on the $675 debit. You can make $11,000 on this, and then that's let me just reset this. No, yeah, okay, that's what's going on. My slider was off. Thanks for catching that, guys. So we're looking at what are we looking at here? We need to sell more of these. The ratio has to be pretty close. Maybe that's just too expensive. 3, 4. What if we're just doing 3 to 4? I love playing with these types of things, these types of ratios. This is a $256 position. So in the next 45 days, if Palantir stays above 140, then the short puts expire worthless. There's definitely risk on this. There's a max loss of 8,300, but what will happen is the volatility expansion will start to kick in. It doesn't move the break even over a ton. Like, don't think this is like some magic pill here. The break even right now is around $134. And even if there was a huge IV expansion, it does not just take it away. It doesn't do that. It doesn't function that way. But definitely having this extra put in here can work quite well. The other way we can do it is just buy a tighter spread. So this reduces the risk, and this will increase the amount that the profit tank grows, but it also increases the cost to enter. It's about a $400 trade. This is an interesting thing because Palantir is actually going to, if it goes down, it's a nice little probability of profit. Okay, I'm going to screen grab that. I'm going to play with that trade a little bit more before I actually put it on, but that is, and then so my patrons will see that. If you guys aren't a patron already, you should check out Patreon, head over to the Discord. You can chat with me. We're putting on trades. Yesterday what did I do? 30, I think I did 34 new trades. It's been bonkers. We've been just killing it lately, so it's been great. Mike says, regarding early, I've been playing double calendars. Front week and the earnings week and back week is the week after. How's that been going, Mike? Has it been good? Have you been like, some of these earnings have stayed in the range. Has it, obviously that there's a bit of compression. Are you making a 10% return? Saya says, your content is interesting. I learned a few things long ago thanks to you. Well, I'm glad. I thank you so much for saying so. Mike says, I hold the position until a day or two before earnings and then close it, hoping to scalp the IV Vega gain. Yeah, that, diagonals are like that. They do increase. They are a long Vega play. So as volatility increases, that can be a very, very smart move. Of course, the risk is that the earnings get released. I know that doesn't happen very often. The risk is the earnings get released prior to when they're expected to be released, and when that happens, we see the collapse of the IV happen prior to the earnings. So it's just when like mistakes happen and numbers get out prior, which happens. Justin says, so the AI bubble isn't busted yet. We don't know. We don't know when it will happen. Some of these stocks are way overvalued. So, but some of them are still undervalued. It's wild. One thing to consider with Palantir, I have to say, like, I am not saying, I think Palantir for sure is going down like that. It's hard to bet against a stock like this because it's got a lot of momentum, and we can see that here on Seeking Alpha. The momentum is in A, and one of the things that I think is key is the profitability. Now, what was it that we just looked at? We looked at what was the other stock we were looking at? Meta. Meta is another good one, and we were looking at also Chewy. So let me just pull up all of these. The profitability of Meta is also an A+. This is a key metric for me. When I want to own long stocks, like when I want to have a long delta position, I want to be in profitable companies, because long-term profitable companies go up in value. Profitability on Chewy is a B-. So the share price is actually still showing as an F on Seeking Alpha. What does it show on investing.com? Chewy. Chewy, fair value, 37 bucks, currently trading at 32 bucks. We've got, got arrows everywhere here. Holds more cash than debt on its balance sheet. RSI suggests the stock is in oversold territory. We saw that on the chart, right? You guys saw that we were looking at Chewy and it seems to be down at that bottom. We've got some metrics down here we can look at. I don't look at this a ton, but this is something that we could see a potential turning point when we see a bounce. But the biggest thing is we're getting very, very close to this one standard deviation off VWAP. And that is something that I watch very closely, is just this as a range play. And we're seeing like a hammer candle right now. See that? Do you guys know what the hammer candle is? Wish I could zoom in a little bit more on this. I don't know how to zoom in. I'm trying something else here. But that candle, when we see that, the hammer candle, is when we saw the trading range of today, and then we're closing very, very close to where we opened, and it's slightly green. And it means the bulk of the trading that occurred today is trading right near the top, and it's like that buying that's occurring, everybody's buying up this price. And this usually indicates that we could see a move to the upside. So things to consider. Okay, it is 11:46. I am going to cut it here today. This has been fantastic. We are doing things like getting rich together. That's the goal. If you haven't signed up already, you can head over to my website. Just get your email in the email list. You can get my weekly emails. I send out different trades so you can get an idea of what type of trades that I'm putting on, how I'm holding them, when I'm rolling them. I do a lot of rolled trades. I have almost 100 trades on at any given time. And what I do with those is that I get us into positions, or get me, sorry, I'm not doing it for other people. I'm doing what I'm doing. Full disclaimer, I don't trade for other people. I just trade for myself. But what I am doing is I'm putting in positions where I can ride them for a long term. I don't like hunting for new positions constantly. So I typically only put on about like 10 to 20 new trades a week. This week was an exception because we saw that volatility spike up a little bit. There was lots of short puts. There was lots of things I wanted to buy. So I was, hoping that this pullback is going to be short-lived, and we're going to power into the rest of the year, playing some fairly aggressive positions. But in typical, what I'm doing is I'm putting on positions, and then I'm just like monitoring them. I'm watching them go, and it's been pretty great. I've been doing that for years and years and years. I've been now posting my trades publicly for 8 years? Longer than that, it seems. I think I started like in 2017, which is wild. I've been an options trader since 2014. So I've been doing this for a ton of time, and it's good. I'm getting to a place now where I'm just sit back and like let it roll out. And it's doing very well, as I hope everybody else is. So if you have any questions, you can send me off an email. You can get in touch with me at drawbridgefinance.ca. And as always, thanks so much for watching. Take care. Bye.